Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is David Hunter, Chief Macro Strategist with Contrarian Macro Advisors. He has been in the investment field for over 5 decades, and we're super glad to have you on, sir. Thank you for joining us.
Yeah, thanks, Ivan. Great to see you.
Yeah, really great to see you as well. We wanted to have you on to talk about everything that's happening in the economy, the depression, recession talks that are going on social media. Are we on the brink of something worse than the Great Depression if all continues to skyrocket, like with inflation and everything that happens to the cost of living? What happens to society? Are we on the brink of something worse?
Yeah, I don't think it's a depression. I call it a global bust. We're in tough shape, but Europe's even in worse shape. China's in rough shape, hasn't been in this kind of place for a long time. The rest of the world's really hurting. So we're not in great shape. And as we are seeing, our deficits are growing ever bigger. Our debt is through the roof, and our cost of servicing that debt is beyond anything we can really handle. So there are some big problems out there. I think it will lead to what I have been calling potentially the biggest financial crisis in history, which would mean bigger than 2008-9, and a global bust, which would mean something worse than 2008-9, but not a depression because it would happen more on the order of the time frame of 2008-9. So, something that 12 to 18 months,
Right.
not stretched out over a decade like the Great Depression. So, but it'll be plenty bad. It'll be plenty painful. I think we'll see an awful lot of major financial failures,
Hmm.
bank failures around the world. Probably more of them overseas this time. In 2008-9, it was really centered here. I think, Europe and certainly Asia are both potential problems. So we could see a big bank or two fail here just because of the linkage to other banks around the world, and we're a small world now. Everything's linked.
Hmm.
But more, our banks are better capitalized, certainly better than 2008-9. So not as bad there. Canada, Australia, I think will have some problems. But before we get there, I think we have one more blow off to go. And by the way, that bust is a deflationary bust.
Right.
So while worry right now is inflation, everybody's focused on inflation. I believe ultimately the central banks are going to stay the party too long on the tight side, create a big policy error, and it will lead to the opposite, deflation. A
And
short bout, not something that'll last for years,
mhm.
but for a 12-month period, it could be pretty rough.
Yeah, you absolutely nailed it. And looking at the debt servicing on the 32 trillion, people are saying there's estimates over the next 6 to 9 years that it'll be north of $2 trillion a year, just the debt, just to service that debt. How crazy is that? Like who's gonna buy all this US debt? The inflation numbers. And what does it actually do to precious metals? I wanted to have you on to talk about gold and silver with all this debt and like you said, it'll be a deflationary period, which is way worse than having inflation. Then what happens to gold and silver?
Okay, so just to comment on the debt servicing,
Right.
I think that 2 trillion in or yeah 2 trillion in debt service cost is probably going to prove very conservative, um, because of what I think we'll see in the global bust. I think, as I said, it's a short-lived deflationary bust,
Hmm.
but I think it's going to take something on the order of 20 trillion in new QE or expansion of the Fed balance sheet. So from 8 trillion now up to something like 30 trillion,
Right.
and every central bank doing similar, doing proportionally similar. It's going to take that and fiscal stimulus that will match that. So we'll be monetizing debt like we've seen in the past, but on magnitudes we've never seen. So the 300 trillion in global debt today could grow to something like 450 to 500 trillion by the end of
Wow.
the decade. And that money that gets pumped in say 2024, by the time we get to 2026 7, we're moving towards double digit interest rates, and by the end of the decade, I think we'll be looking at 20% interest rates here in the U.S.
Wow.
Figure out the math. If debt grows to what I'm saying, and interest rates go there, there's no equation that can solve it and come up with anything that's even livable. I mean, it'll eat up our entire budget and then some.
Wow.
Where do you find the funds to, fund the military? Where do you find the funds to, fund Social Security, Medicare, and Medicaid, and unemployment, and the welfare programs, etc. So it's a pretty dire situation we're running into. It's a step-by-step thing, so it's not like that's tomorrow.
Right.
That's something that I think by the 2030s we could see basically a financial collapse in the world, because this is going to be not just the U.S., it's going to be around the globe. Interest rates and inflation are going to go sky high, and there's really a time where, just like, let's look at the California forest fires. If you have fires and you have no water, and you say, well, I'm gonna pump gas on it because it's the only fluid I have, that's what the Fed's going to be doing,
Wow.
what the central banks are going to be doing, and it just creates more inflation. At some point, they have to shut it off because they finally realize that more money creates more inflation, and we can't win this game, can't win this race. So there comes a time late this decade where I think we're going to lose the Fed as a source of any funding,
Hmm.
any monetization of debt. We're going to lose our access to debt, because who's going to want, when they look at the fiscal situation, they're going to say, how can they service that?
Yeah.
So once you shut off the pipe, the pump, and once you shut off the fiscal, you have to live within what you have, and we're not going to be able to balance that equation. So there's something between now and the 30s that is very investable,
Hmm.
but just understand that's where I think we're headed. And this is something that's been building over decades. It's really, I call it the end of a super cycle that started, after the Great Depression. And so it's a 80, 90-year super cycle. And at the end, you get to these extremes because the excesses grow to levels that you can't possibly manage. And that's, I think we're in that final decade of that. As for, it's that kind of a scenario for gold and silver, I think it's a very bullish story, for between now, right now. I think we're very close to a big reversal in gold and silver right here, and then through the decade, such that I'm calling for, well, short term, I'm calling for 3,000 on gold pre-bust. So if the bust starts sometime in the first half of next year, before we get to that, I think gold can run to 3,000. So once it breaks above its old highs, I think it can run pretty fast.
Yeah.
I'm calling for 60 to go to silver to go to 60 in that time frame, and then the bust will probably take them both back. Certainly could come back to these levels. Maybe not all the way, maybe all the way, but and then once you get through the bust, I think it's a huge, huge cycle for gold and silver and all commodities.
Yeah.
And so I'm calling for gold by the end of the decade at 20,000. Silver at the end of the decade, $400 or $500. Oil at the end of the decade, 500. So it'll be a huge commodity inflation cycle.
Absolutely. And we're hoping it gets to that. Like, we're hoping silver and gold gets that, but we don't want to hope for that as well, because that would be catastrophe. Like, it would be horrible for society. At the same time, we would rather have it a slow and gradual increase, but it is inevitable. Do you think back thousands of years ago back in ancient Rome, historians and economists were talking about the same thing with their dollar in Rome?
Certainly, on some level, we're seeing some of the same things repeat. The
Yeah.
decline and fall of the Roman Empire. We're seeing a lot of the same kind of things going on now. Certainly in the West and in our country, in terms of not, we're losing our work ethic. We're losing our education. The emphasis on education, the emphasis now is on social values and things like that.
Yeah.
We're certainly you know, not so much Rome, but from a standpoint of this country, what got us here was a very capitalistic spirit, very much an individualistic spirit, and we're seeing ourselves move far away from that now. So, I think unfortunately history is ripe with examples of, you have your fun in the sun, you have your big time,
Hmm.
and what got you there gets lost in the process, and people become fat and happy, and
Yeah.
governments become bloated, and bureaucracy becomes the story, and then the things that built this great country get lost.
Yeah, absolutely. You nailed it, David. And just looking back at everything that we talked about in this interview and just connecting it to, let's say by 2030, there is a massive collapse in either the US dollar, or debt just becomes too much, where just something pops around, like what you were saying, like a global kind of financial collapse. What would happen? Would they push a central bank digital currency? Would people accept it? Would that new system erase all prior debt, like a 32 trillion, and just reset? Is that, what do you think?
Yeah, that's a good question. I want to be clear. I'm not saying the bell strikes at
Right,
2030 and we're in collapse.
right.
It could be 2035. It could be 2032. I have no idea. It's
Yeah.
just out the next decade. Um, I look at it, and basically the numbers I gave you before about the debt and the interest rates and the inflation, there reaches a point where I don't think countries around the world are going to be able to fund their debt.
Hmm.
And think about that. You're going to have a situation where you basically everything that you're in your lifetime and mine, a lot of what we've seen has been financed by government expansion. And it's going to be the other way around. The government's going to be bankrupt
Wow.
and collapse. So where's the welfare system? It's gone. Where's the funds? There may be some funds left over for Social Security and Medicare, but not a lot. I mean, so that'll be a fraction of what it is today. Where's if unemployment goes, let's say, to 50% in a collapse, where's the welfare? That they or the unemployment benefits. None of that's going to be there. So it's basically, you just you're in a situation where I can't predict what comes out of it, other than I think the likelihood is some sort of totalitarian response is what you have to worry about.
Wow.
Um, digital currency, Bitcoin, type of thing that I know people want desperately to say, well, this is why we need to get out around the system.
Hmm.
The problem is the things I'm describing are so big that Bitcoin can't solve that. I mean, it can, for those outside the system in Bitcoin, you might have something that saves you as an individual, but for the vast majority of the population in this country and around the world, digital just doesn't solve the problem. It's
Absolutely.
it's a problem that's built over 80, 90 years that then goes the other way in a big way in a collapse. Where does digital fill
Wow.
that bill? It doesn't. So
Yeah.
I know it's nice to talk about the central banks are the reason we got here, and so let's find some system outside the central banks and something that's not centralized and controlled. I'm all for that. The problem is that this has already happened. So maybe once everything falls into a heap of ashes, that will be the system that comes out of it.
Hmm.
But certainly, I don't think that system is an answer for what we're going to be running into. It
Yeah.
it may come out of that, but going into it, it's not going to solve your problems.
Yeah, no, it's a very, like what you just said is hit spot on, and I absolutely agree. I think it's going to be a scary outlook within if a totalitarian regime worldwide does come into place, because this current system does fail, and then that comes out of the ashes. I think it'll be horrible. I think it'll
Yeah,
be
sure. I
horrible.
mean, yeah, it could be the other, which is that the totalitarians, the communist systems will be failing as well.
Mm,
So what could come out of that is a rebuilding, the beginning of understanding. We got to go back to, you know, really building things from the bottom up and individual power rather than government power, et cetera. It may be that we turn completely away from that,
Mm.
and there's certainly, the fourth turning, book talks about, maybe by the 2030s or 40s, you do see that you go through these cycles and then you come out the other side with something that's more what we would like to see. So that's possible,
Interesting.
but getting from here to there is going to be painful, very painful. And what I tell people is try not to lose sleep over, and that's why I tend not to like to get too much into the 2030s, because people jump over everything else and then lose sleep over something that's 10 years out.
Right.
I think what we have very near term is a melt up coming, which means we could see S&P 6 or 7,000, in the next few months, as crazy as that sounds, because I think central banks around the world are going to begin to talk about the end of tightening.
Mm.
You just saw it with the ECB today. They're all talking higher for longer, but they're saying we may be at the level where we just hold at these levels. So,
Yeah.
the Fed's starting to talk that way. The ECB is starting to talk that way. China's certainly at a point where they need to figure out some kind of a stimulus, because their country, their economy is going south
Hmm.
in a hurry. So we may be at a point where investors will see that the tightening cycle is ending and latch onto that and take the ball and run with it. And you could see what I call melt up is you could see 1,000, 2,000 points in the S&P happen over a matter of just a few months.
Wow.
And so that's here. And then 2024, and doesn't mean it starts January 1st, 2024, but a bust in 2024. And then I think what follows the bust in probably second half of 25 and beyond is a huge commodity cycle unlike any we've seen. So, if oil could fall to 30 in the bust and then rise to 500 in the next 5 or 6 years.
Wow.
Gold could fall back to 2,000 in the bust and then rise to 20,000 by the end of the decade. So it doesn't mean there's no investment opportunities once we hit the bust. There's a lot to follow the bust because of all the money that's going to be created.
Hmm.
Um, and then that leads to much bigger problems. But for investors, they need to understand, take it one step at a time. Don't get yourself caught up and say, well, it's not that far off, it's within the next decade, and then freeze.
Yeah,
If you can
it's
get your
coming.
house in order this decade, you may be better situated for what's to come.
Absolutely. And David, it's been such a pleasure having you on. Before you do go, can you let the people know where to contact you, where they can find you for your social media links?
Sure. Yeah, I'm on Twitter every day, pretty much
Nice.
every day. And some people like what I say, and some people don't like what I say, and I hear it from them. So, but yeah, people can follow me on Twitter. My
Nice.
handle is at Dave H Contrarian, and I will just point out there are lots of fake accounts out there who will show my profile,
Hmm.
and just change the username slightly. So you have to be very careful. I've got 190 some odd followers, 90,000 some odd followers. So
That's
if
how
you
they'll
don't
know.
see that, if you see, somebody, it looks like me, but there's only 1,000 followers or
Yeah, yeah,
500 followers,
that's not you.
that's a dead giveaway that's not me. I only have one account. It's not, there aren't several Dave H. Contrarians.
We'll put it in the link so it's easier for them.
Okay, and then
Yeah.
I do have an investment letter that I publish quarterly. It's by subscription, so there's a cost to it. If anybody has interest in that, wants to know, what it costs, etc., you can direct message me on Twitter. I don't talk about my letter on the broad Twitter, but
Right.
direct message me on Twitter, and I'll give you the information.
Awesome. Well, we want to thank you again for coming down, David. And hopefully, as the market develops, we'd love to have you back. That was a great interview.
Yeah, I think I will say I think we're right at a turning point here. I can't stress enough. I think there's a huge reversal
Hmm.
coming in the dollar to the downside in interest rates to the downside, and in the stock market and in metals to the upside. So
Absolutely.
we may be seeing that right here. I mean, right today. It's very close. I don't, you never know until after the fact exactly what day it is, but there are some signs that we're right on that reversal point.
Yeah, absolutely. And we'll be watching closely with you. Again, David, thank you so much for coming down, and would love to have you back on as the market develops.
Okay, sounds good, Ivan. Great to see you.
Take care.